Hello friends, I'm Jain from Anand Rathi. We are back with a weekly podcast session with Mr. Nilesh Jain, Derivatives and Technical Analyst at Anand Rathi. So Nilesh, welcome back and thank you for joining in the podcast series to share your market outlook for the week. So how is the market looking on charts and what are the momentum indicators indicating for the coming week?
Hi Lily. The market continued to gain the momentum for the sixth consecutive week. If you look at the structure for the Nifty, it has been making a higher top and higher bottom formation on the daily chart. And as expected, Nifty has also reached our short-term target price of 11,200, which we highlighted in our previous podcast. The overall structure hints of a further positive momentum towards the levels of 11,300, 11,400 levels. On the downside, if we look at the major support, which is now placed at 10,860 levels, which is 200-day moving average. Earlier in the previous week, we saw Nifty surpassed its 200-day moving average and also sustaining above the same. So the short-term to medium-term structure will remain positive till the time it doesn't break below its 200 DMA. And also if we connect all the lows starting with 7500, then a rising trend line has been developed, and the support of this rising trend line is also coming near about 10,750 to 10,800 kind of a levels, which is again giving a sort of a support to the Nifty. And if you look at the momentum indicators and oscillators on the daily chart, which has gone into extremely overbought territory, which is a bit of concern. But if you look at the weekly chart, then the momentum indicators and oscillators are very much on the positive side. MACD has already provided a buy crossover and we can expect further momentum on that front as well. Now if we take the Fibonacci retracement of the entire fall, then 78.6% retracement, which is now coming around 11,400 levels, which will act as a major resistance zone for the Nifty. So a broader range for the Nifty, it looks like 10,800 to 11,400 for short term. Now if you look at the structure for the Bank Nifty, as we have highlighted that it is trading in a rising channel and the upper end of the channel is coming around 23,200. So as long as it trades below that, we can expect some sort of a consolidation in the Bank Nifty. At the same time, the immediate support for the Bank Nifty is placed around 21,500. So short-term trading range looks like 21,500 to 23,200. Above 23,200, if at all Bank Nifty breaks out, then a further positive momentum is likely to be carry forward towards the levels of 24,000 and 24,500. The weekly MACD is still very much on the buy side for the Bank Nifty. RSI is also making a higher top and higher bottom on the weekly scale. So the structure is still looking positive till the time it holds above its major support of 21,000. Lastly, if we look at the volatility index India weeks, which is hovering below the levels of 25, which is giving comfort to the bulls. So as long as volatility index India weeks trades below the levels of 30, the bulls will likely to be having the upper hand in the market.
Ahead of the monthly FNO expiry for the July series, what are the derivatives data indicating?
Now if you look at the derivative setup for the monthly expiry expiring next week, then fresh put writing was seen at 11,000 and 11,100 strike, where 11,000 strike hold the maximum open interest of 43.7 lakh contract. So based on the data, it seems like the put writers are convinced that Nifty will not breach below the levels of 11,000 in the coming week. At the same time, we have also seen fresh call writing at majority of the call strike, starting with 11,300, 400 and also 11,500 strike. 11,500 hold the maximum open interest of 38.6 lakh contract, whereas the second highest open interest is placed at 11,200 strike. So if at all Nifty surpass and sustains above 11,200 levels, then we can expect sort of short covering move towards the levels of 11,300 and 11,400. So based on the data, the broader range that is coming out around 11,000 on the downside is likely to act as a major support, and it would be very difficult for Nifty to surpass 11,500 levels on the higher side. So Nifty is likely to oscillate in the range of 11,000 to 11,500 in the coming week. And remember, we have monthly expiry in the coming week, so markets are likely to be extremely volatile.
Thank you, Nilesh, for sharing your valuable inputs with us.